how people live in a city is very much interfaced with what they do in a city, where they work, where they want to send their kids to school. And it makes a hell of a difference as to how we tend to urbanize. Welcome to the Urban Property Investor. I'm your host, Sam Saggers, here to help you crack the code of real estate wealth. Today's show, we're going to dig into urbanization. It's a topic I love talking about. It's something I study, and for me, just where people want to live and why they choose to live somewhere is really a compelling part of property investment. Property investment, of course, is about property, but equally it's about people. Urbanization is simply the pathway of where people go. It's the desire line that people follow when it comes to their choice of living. And today I want to go through some models inside of urbanization so you can make some great decisions on potentially where you want to invest your money. But hey, welcome back, regulars. Play the program in double speed, get your life back. And of course, all the episodes I've done are actually lessons on real estate. But I tell you what, I'm getting a lesson by the neighbors at the moment. It's been raining here in Sydney for basically 4 weeks in a row. It has not stopped raining. It's been pelting down for a month. And today, the sun came out. Wow, what a life moment. Finally, the sun's out. And guess what happens? The Gospodar and the Dodic. Yes, we have a new person in the neighborhood, and we've called him the Dodic. We don't even know what that means, but he's like the little son of the Gospodar. And between the two of them, they are now doing leaf blowers. Yes, the first day of sun and the leaf blowers are out. Can you believe it? Do these people have anything else to do with their life? So that's driving me bonkers because I just wanted to do this podcast and then go out in the sun. But no, I have to listen to all of the gardening equipment coming out in the middle of winter to mow a lawn that doesn't need mowing, to blow a leaf that doesn't need to be blown. And yes, I have my noise cancelling construction level earphones to walk around my own house. So I've urbanized into an area of gardeners. I've urbanized into an area of leaf blowers. But what do the mass community, how do they urbanize, and what is urbanization? I want to take you through it because I've made a lot of money over the years and I've helped people make a lot of money over the years following some concepts around where and how people will live. And of course, Australia is a pretty lucky country. It's pretty simple equation here in Australia. There's always typically more migration coming into the country. And of course, that tops up the amount of people inside of the country. It's a scheme which really layers more taxpayers at the bottom to support an aging population. We see around the world, though, the world is urbanizing. And one could argue there really is no such thing as a rich rural country. There are only today rich urban countries, and actually cities dominate that wealth profile within our country, within other countries, and almost cities have become city-states in themselves. Today, the GDP of New York or London or Tokyo or Dubai is just astronomical for their respective countries. So cities serve a huge purpose when it comes to economics. And of course, economics is driven through the concept of scarcity. If areas are more scarce than others, they're going to do very, very well. But human beings have desire lines, and they tend to follow typical routes of urbanization, where they settle, where they want to live when it comes to the functionality of a city. Now, when you think about a city's got all sorts of functions to it. It's got roads, it's got airports, it's got business centers, it's got commercial centers, it's got manufacturing precincts, it's got different elements to how a city typically works. And of course, how people live in a city is very much interfaced with what they do in a city, where they work, where they want to send their kids to school. And it makes a hell of a difference as to how we tend to urbanize. So urbanization is something that's been studied by multiple demographers and economists, and it's a well-trodden concept. There are actually three pretty critical concepts when it comes to urbanization. I think we can all appreciate that around the world, people are pouring into cities from more regional or rural communities. In China today, most Chinese people now live in cities. 50 years ago, they were living in country villages. The rapid rate of urbanization is important to the growth of a country, and it can be very important to the growth of a property investor. Where will growth happen inside of our city? By understanding the pathway of how people actually urbanize. And you think about a city like Sydney or Melbourne or Brisbane, people will come to that city, but where will they go? People are born in that city, but where do they want to live? And of course, it's not distributed evenly. Where people want to live is generally not distributed across the board. And so what we can do is study urbanization to understand the modes of how people actually live. So the first urbanization model is the concentric zone model of urbanization. Really, that model, if you like, is there are three rings to our cities. The inner urban ring, which is about 1 to 10 kilometers from the city. And typically the inner urban ring, originally when it was set up where all the factories were and light industry. And it was set up around the CBD. And really that 1 to 10 kilometer ring today, it was set up 100, 200 years ago with small, quite often terrace homes, which were the workers in the factories. And that 1 to 10 kilometer ring today has been well and truly gentrified. It's not too many ungentrified areas within that urban realm these days. Can find the odd needle in a haystack, but for the most part in major areas, these places have been long discovered and you get this gentrification effect on the place. Think Collingwood, Fitzroy, Richmond, Redfern, Surrey Hills, in Brisbane, New Farm, Tenerife, West End, South Brisbane. They typically have had a lot of infrastructure put into them and a lot of transformational change. Now, 5 or 6 years ago, probably all the way back for 20 years, I was very, very an advocate of telling people to buy as much as they could, both in the inner urban ring and the middle suburban ring. So that middle suburban ring is really the missing middle, it's sometimes known as in real estate. And why it's called the missing middle, it hasn't had a lot of product put into it. And it's typically a housing market, sometimes townhouses, but for the most part, it's a broad townhouse market. And that sort of middle ring, if you like, sort of goes from sort of 10 to 30 kilometers from the CBD. And it's well established and well built out. It is hard to resupply in a dense manner. Today, there are some zoning instruments that sort of allow the properties in those areas to be, quite often turned into, a block of 4 townhouses, but you won't see, a skyscraper put typically in the missing middle, in the middle ring of our cities. Now, as I alluded to, probably for 15 years, I have been telling people to buy as much as they can in the middle suburban ring of our cities, typically 10 to, 25, 30 kilometers from the city. If you can get into the land market, the housing market in that precinct, you're going to do really, really well. Why? They're not making any more land. 10, 15, 20, 25, 30 kilometers to the CBD. And of course, that in an urban ring, that 1 to 10 kilometer precinct, over the years, I've helped people invest there, and typically as well, sometimes also in the apartment space in that precinct where you can get entry-level, high-quality apartment as well. But what we're starting to see is the cost effect of the inner ring and the middle ring become very challenging for property investors who have budgets quite often below the median. A lot of property investors are spending $500, $600, $700, $800,000, and today to buy a house 15 Ks from a major city, it's well over $1 million, sometimes well over $2 million. So, of course, then we have the outer ring, and the outer ring in the concentric zone model of urbanization generally sort of starts anywhere from sort of 35 kilometers from the city and can sprawl all the way out to 75 kilometers further afield from the CBD itself. And really, it's that concentric zone model of urbanization by explaining the outer ring, which I want to have a further conversation about, because property investors now need to go further afield based on affordability to quite often build a portfolio. And of course, we know through urbanization that cities will do well over time. They will continue to grow and they will continue to perform. So if we can get some money into those places, potentially pick up some land in our cities, we will do well over time. But not all land or property is created equal. And this is where we can study alternative models of urbanization. We can study what is known as the multi-nuclear model of urbanization. What is the multi-nuclear model of urbanization? Well, you may have heard the phrase live, work, play, or 15-minute city. The multi-nuclear model of urbanization is one of which I'm doing a lot of property investment today in. As I've alluded to, the middle ring of our cities are, can be well over $1 million. I still invest there with clients that can afford $1 million investment or more, investing literally in the housing market 15 Ks to the city. I still invest with clients in the inner urban area, 5 Ks from the city. Typically what that is today is luxury trophy apartment complexes, never to be built out views, astonishingly incredible rebirth locations. But for the entry-level investor, someone with a more modest budget, perhaps building wealth, quite often they're restricted from those inner and middle areas, so they've got to go to an outer neighborhood. And that's just the reality of a lot of people should have pulled the trigger on investing 10 years ago. I can't change that. They can't change that. We've just got to work out how to work within the landscape that is here today. There's nothing we can do about it. We cannot cry over spilt milk. But the multi-nuclear model of urbanization, live, work, play, is really designed around where is livability? Where is the livability index thriving in our cities? And when you study livability, you will find that it's very patchwork. It's pretty prominent in those inner and middle areas of our CBDs. And then as we go further afield, it can be very, very patchwork. So if people love the livability of an outer suburb, to me, that makes a lot of sense when it comes to where people will urbanize, where the demand will be led to. And Bernard Salt, the famous demographer, talks about this a lot. He calls a city today, instead of a fried egg, a scrambled egg. That really there are great pockets to live in, not just close to the city, but much further afield from the city. And they're great because they might have natural amenities like their own beaches. They might have great green space. They may have great things to do on the weekend. They may have great shopping precincts. They may be culturally interesting areas. They are further from the city, but people are choosing to live in them, and they carry with it a high livability index. People live, work, and play. And of course, because of the digitalization of a lot of people's jobs, today a lot of people do not need to travel to work every single day, to work in an office every single day. And so that has game changed the multi-nuclear model of urbanization. Today, people are urbanizing to livable suburbs, affordable yet highly livable neighborhoods, to live there, shop there, work there, and play there. And the suburb needs to be so good that people can do all of those activities in that neighborhood. And you are seeing the gentrification of many outer suburbs. Now, when I study the livability of our urban areas, livability is actually a much scarce resource than a lack of livability. There are plenty of outer suburbs. There are plenty of suburbs in general that lack livability. And really, they are known as dormitory places. People just go there to sleep and have a roof over their head. There is nothing to do, and you have to leave the neighborhood to play. You have to leave the neighborhood to work, and you live there. They are live suburbs, but they are not live, work, play suburbs or neighborhoods. And so because of that, we're seeing a concept known as geo-lifestyle arbitrage go to these places. You are taking a really good level of wealth and income, and you are transferring that level of wealth to that model of urbanization. Now, a very livable place today is, for example, Ballarat outside of Melbourne, or Geelong outside of Melbourne. It's 75 kilometres to Melbourne. That is Geelong. It is not close to the CBD of Melbourne CBD. It's a long way from it. But the livability index is just very, very high, around through to, all the way through to Point Cook, for example. The livability index in Melbourne is just very, very high in certain pockets. What it means is people can play, they can live, they can do everything. They can do everything, and their life is really concentrated around where they live. And that model is allowing for capital growth in housing. And it really is the concept of gentrification. Gentrification, if you break down the word, is just the gentry. The gentry effectively translates through the Oxford Dictionary as a higher social status class. And that just means people who earn more money. People who earn more money are going to outer suburbs that have livability if they cannot afford the inner or middle ring. And that is the multi-nuclear model of urbanisation, as Bernard Salt calls it, the scrambled egg city. Where can we live, work, and play? And people will want to urbanise there. And when there's more people urbanising in a place, there's just more demand in a place. And of course, there's a correlation of property values increasing when people prefer a spot. And the final version of urbanisation is the sector model of urbanisation. Really, the sector model is that cities create wedges where people really want to live along transport nodes. Growth follows transport routes. And so if you can follow the transport, quite often there would be a good level of demand for those areas. Now, they may not be the most livable places per the multi-nuclear model, but they are well serviced and amenitized, and as such, they become very, very popular. Now, the fact that we have seen just huge amounts of growth where train lines flow is evidence that the sector model of urbanisation is one of the best models to create capital growth. Yes, it can be in an outer suburb, but that outer suburb can do very, very well, particularly if you can get into that area at an early stage. Now, I'll give you some evidence around these kind of places, and you can track the capital growth. What you are tracking is the capital growth of sector model urbanisation. So, for example, here in Sydney, we had a train line get extended to a precinct called Rouse Hill. Over the last 10 years, the capital growth rate, once that train line was activated, has been spectacular for Rouse Hill. And Rouse Hill is like 50 Ks from the CBD. Why would someone want to live 50 Ks from the CBD? Well, they are following the transport route. A while ago, 7-8 years ago, I was telling everyone to buy in a place called Mango Hill in Brisbane. Why? It was getting the train line to a place called Capestone. Of course, if you look at the capital growth, it has been spectacular. What is that capital growth? That capital growth is sector model urbanisation unfolding. The demand gets off the train. The demand uses the transport. If you look at Springfield in southeast Queensland, another place. If you track the capital growth, it's been exponential. And again, if you compare that growth to a neighborhood without transport, without the train, you can see a differential, particularly in an outer suburb version. If that outer suburb is not a live, work, play suburb under multi-nuclear urbanisation, or not an outer suburb under sector urbanisation, the capital growth rates will be very, very different, very different. And to the point where, we're talking hundreds of thousands of dollars differential. And so growth follows transport routes. Now, there's a very famous real estate firm here in Sydney that does a lot of sales. And I was having a chat with one of the consultants that works at that real estate firm about where and what they list when it comes to Sydney real estate. And I was very interested in their response, because I asked them, where do you focus on your projects and so forth. And this is a real estate agent that does a lot of project work in new land communities and new apartments and established apartments. Like, they're big. And they replied to me that they only list real estate where there is transport. They do not want listings outside of where there is no transport. Now, I found that quite fascinating, because they are betting their business model on sector model urbanisation. In other words, they realize that if they have real estate to sell, there's just simply less demand the further afield you get from transport. And so they follow transport because transport brings demand, and their business model is about selling real estate. Real estate sales is led by demand. So it is very, very interesting. And then, of course, there are areas which I wouldn't necessarily like to invest that have done very well through sector model urbanisation. I'm not a fan of Tarnee. Like, Tarnee to me has no trees. It's like an ugly place. But actually, if you look at the capital growth, it's been pretty good over the last 10 years through sector model urbanisation. So obviously, you want to be able to pick the right neighbourhoods and the right areas as part of the wedge system along the transport route. But effectively, the transport route of sector model urbanisation creates a good rate of growth, a great rate of growth. And again, if you go back to the concentric zone model of urbanisation, it'd be great if we could all afford to buy 3 Ks from the CBD of a major city and grab a house. But not everyone can do that. It'd be great to buy, 15 Ks from the CBD of a city and buy something for, 600 grand, but not everyone can do that. It's just not possible. And so this is where, when you do go to the outer suburbs, you've got to go, okay, well, I would follow sector urbanisation and or multi-nuclear urbanisation, and that is how I'm going to create money. Now, the other thing we need to realize right now inside of economics as to what is going on, well, there's 2 huge demand groups, and those demand groups are the baby boomer and the millennial. The millennial is effectively looking for 3 or 4 bedroom homes. They are very happy with 3 bedrooms because they're only having 1 child. Equally, if they can afford it, they will take a 4 bedroom. Of course, obviously, some millennials will have 3 kids, so they're looking for larger homes. The baby boomer, on contrast, is very, very wealthy. They've gone through multiple property cycles. They bought a house for a can of Coke back in the 70s. And today that can of Coke is worth, $5, $6, $7 million. So a lot of the baby boomers are actually buying more convenient properties. They're right sizing as opposed to downsizing. And what they're looking at is more luxury kind of apartment product in very good lifestyle locations. And so when it comes to the idea of real estate growth, it is quite often led around this concept of the migration of money. And of course, we know there is money migrating into Southeast Queensland at the moment, and there's a lot of interest around the Olympic Games, and we're starting to see the migration of money into the Victorian cities, your Ballarats, Bendigos, Geelongs and Melbourne, and really that's driven around just the price delta of those marketplaces being sometimes 30, 40% less expensive than Sydney, Brisbane, Perth, Adelaide, etc. So you're starting to get this migration effect of where money goes. So then you've got to ask yourself, okay, well, I've got a budget of less than $1 million. That's probably going to rule me out of premier, middle, 15Ks from the city of these cities. You're probably not going to be able to afford to invest there in a premium asset in the right street, in the right location, in the right product. There are plenty of probably dodgy products around, but if you actually want something decent, like good street appeal, good, product size, no rehab work, no major renovation problems, no major structural problems, then, if you can't spend over $1 million, you've got to consider urbanisation. And really, I break it down into the two components. What is the geographical pathway to growth? What is the geographical pathway to growth? The geographical pathway to growth is designed around the demographical pathway to growth. What is the demographics doing right now? Demographics shape what happens to property. Property investors are a small minority. Whether we think Brisbane's better than Melbourne or Melbourne's better than Perth or Perth's better than Adelaide, that's short. That's a short kind of period of time. What is more relative to time, and real estate is a time-bound asset class, is really understanding demographical pathways to growth, meeting geographical pathways to growth. And so, as we know, the two demographics, which is shopping right now, millennials want 3-bedroom properties. Where do they want those 3-bedroom properties? Well, of course, if they can afford it, they're going to do it in urban areas or middle suburban areas. If they cannot afford that, what do they want? What is their geographical pathway to growth? They want two things: transport and or livability. They want sector urbanization or they want multi-nuclear urbanization. That's it. That's it. As for the baby boomers, they want their demographical pathway to growth is very different. Their geographical pathway to growth is very different. The result they're looking for is inner urban luxury properties, or they're looking for lifestyle apartments or lifestyle houses on beaches. Different. And again, for the most part, following the baby boomer market is great. You're going to make a lot of money because they're all cash and they're all pushing values up, but they are looking in typically already well-priced marketplaces. Pre-gentrified marketplaces is really where the millennials are shopping, and really that the fact that they're coming to those places is going to push up property values. And again, you just go back to the word gentry. The gentry is coming to town. Which town are they coming to? Are they going to all outer suburbs? Well, some are going to plenty of outer suburbs. Do all outer suburbs work effectively the same? No, they don't. How do we exclusively make sure we invest in an outer suburb which is going to perform? We can follow sector urbanisation or multi-nuclear urbanisation. All right, folks, I hope that was helpful. As I allude to, a big part of my job is sharing information about real estate. That was a bit of a lesson today. If you want some more lessons on real estate, feel free to get my property book. It's on Amazon. It's called The Australian Property Game. And Amazon deliver it pretty quickly within 1 or 2 days. You can start to read all about investment in real estate and really understand property investment. The book's not really about foo-foo stuff when it comes to property investment that, I don't know, I've read some property books and they're not much chop if you ask me. They don't really tell you anything other than, set some goals and buy a property and, come back and do it again. If you want to dig into what really property investment is and how it works, grab the book. All right, folks, thanks very much for your time. I will catch you when we do this all again down the track next week. Thanks for tuning in to the Urban Property Investor. If you enjoyed the episode, make sure to subscribe on your favorite podcast platform or YouTube so you never miss an episode. I'd love for you to rate the show and share it with your family and friends. Let's spread the word about property investing. Stay connected between episodes on Facebook, Instagram, and LinkedIn. And check out the rest of our podcast network at positivementor.com.au. And if you're serious about growing your property portfolio, don't miss our complimentary Property Investor Nights. Register now via the link in the show notes. See you next time.